good afternoon, everyone. I hope you all enjoyed lunch. I certainly did. And once again, welcome to this session about raising finance in international ship owners' perspective. Big thank you to Capital Links for giving me this chance to host this esteemed panel, to moderate this panel of very esteemed guests. And without further ado, I would just quickly start with a brief introduction of our panelists today, going from my left-hand side. First of all, we have Mr. Nick Daskalakis, Managing Director of Alpha Shipping Advisors, a boutique maritime advisory firm. And then we have Mr. Gautam Khurana, CFO of Precious Shipping PLC, Bangkok publicly traded dry bulk carrier specialist. And then we have Mr. Michalis Livanos, CFO of DryDel Shipping Inc. And then we have Mr. Armaos, CFO of Lavinia Corporation and Laskaridis Shipping Company Limited. And last but not least, we have Mr. Stavros Gyftakis, CFO of Seanergy Maritime Holding Corporation and United Maritime Corporation, both publicly traded on NASDAQ. So I'd like to express my sincere gratitude to our panelists for their time and expertise today. And without further ado, I would just start off with some questions for our panelists, and then at the end, if time permits, I will leave some time for questions from the floor, and then we can exchange ideas. So if I may start with Nick, Mr. Daskalakis. As an expert in maritime financial advising, so what are the recent trends that you've observed when putting deals together for owners who wish to raise financing in China?
Thank you very much, Elton. Dear friends, distinguished guests, I'm very happy to be with you back in Shanghai. And Nicholas, thank you very much for arranging yet again another successful conference. During these days, the recent trends, we've seen that the Chinese lessors have been extremely cooperative and with a great appetite to support the needs both from owners and operators. So we've witnessed a very good flexibility in approaching both the structure in terms, for example, of LTV, tenor, or profile that the owner is looking for, and addressing the needs, let's say, these days also of the small to medium size fleets, whereas previously, let's say, it was more known for bigger size outfits. In addition, the latest trend seems to be, they're addressing the issue of new buildings. So all those new buildings that have been placed, Chinese finance is here to do pre-delivery as well. So we've seen a trend for a request for pre and post-delivery on new buildings. And also when it comes to, let's say, one of the key questions when placing orders has been for many years now, which technology will prevail? So there is a residual value risk after 10, let's say 15 years. So Chinese lessors address that by offering also operating lease. So the big trend that we see these days is the offering also of operating lease from Chinese lessors, which helps to, let's say, to place a natural hedge on risks like that. And a latest trend is also that selective lessors can also help with equity participation.
Thank you, that's very helpful. And of course, we can't mention ship finance raising capital in China without mentioning the rise of the Chinese leasing companies. I remember that bit of background about myself. I first started training as a solicitor in 2006. So back in the day, Chinese leasing was seen as this sort of quote-unquote alternative solution, because back then traditionally has always been this sector has been dominated by traditional bank lending, and then of course the occasional capital markets, so bond securitization and so have you. And nowadays, of course, is as mainstream as it gets in terms of providing capital as a source of capital with Chinese and traditional sell leaseback, of course, is a popular model. And you mentioned that operating lease as well. It's and indeed it is what we've been seeing as well, because us as legal service providers. Obviously, we don't always get involved in the very beginning. We wish to, but sometimes by the time it reaches us, we've been told that, this is a term sheet, that's the structure they've mentioned, and we are actually seeing the rise of operating lease being run by big leasing houses as well, whereas traditionally it was always been a sale leaseback, which is essentially a loan dressed up as a lease. And the accounting treatment, ever since IFRS, I think, changed recently, is the same accounting treatment now. And so on that note, do you see more, because I think by rough count there are more than at least anywhere between 20 to 30 PLC leasing houses of various different expertise and skills and sectors. So do you see that keep growing, or do you see that maybe at some point it could potentially go the other way? Or
what we have seen is that, let's say, the established players are consolidating their position, yet their portfolio is growing. We reasonably expect that even this year they'll exceed the drawdowns compared with last year. But in the meantime, we see new players, new leasing companies, not necessarily new in the sense of leasing. They've been, let's say, in aviation, they've been in other fields of the business, yet they invested now into shipping. I think they saw the successful track record of other lessors, and we've seen them coming into the shipping market. However, their teams are very professional, they're very well educated, and they're, and with a great appetite. And this trend is continuing.
Yeah, great, thank you. And indeed, we've also seen, again, traditionally has always been, you can almost treat it like a bilateral loan in the sense that you have one lessor and then they would deal with one owner. And then they would do, say, however many ships, but ultimately the relationship is one lessor. But we've also seen, particularly, say, big ticket size, or when we have, or whereby there was something very particularly complex, then we would have almost like a club deal whereby a few lessors would actually form a JV, and then they would deploy the capital using the particular JV vehicle. So that is not as often, but of course we have seen it happen, again, for very, very special assets, like a big cruise ship, for example, or a big offshore drilling vessel or big rig. So thank you for that. Thank you. And now, if I may move to Mr. Gautam Khurana. And now, as one of the Southeast Asia-based owner, Precious being based in Bangkok and publicly traded on the Bangkok Stock Exchange, would you please tell us your experience so far in raising capital in China? So, for example, what are the very, very good things, and what are the things that you would see perhaps done slightly differently, please?
Thank you, Elton. So we've been raising capital over here since we did our last round of new buildings, which was almost a decade ago. And we have now we've embarked also on another new building program. My expectation is that we will raise finance again. Some of the ships will be financed by China Exim. So over the last decade or so, I would say the center of gravity of ship finance has moved from the Western Hemisphere to this region. And with that has also sort of transferred the knowledge base within shipping finance. The center of knowledge in some senses is over here. This is already the center of shipbuilding. This is already what, at least for the dry bulk sector, this is the most important region. And it's good that, of course, finance is also available over here. So we expect that we will continue to grow to do more financing transactions, either with Chinese leasing houses or with Chinese banks going forward.
Yeah, thank you for that. And on that note, if I may also probe your knowledge a little bit, because I realized that very recently, Precious Shipping did a very interesting transaction, not necessarily based out of China, but nonetheless, it is something that personally I have not seen happen. Maybe because I just haven't had the chance to be exposed in that kind of transaction. But would you please just let us know your experience on that particular deal?
Sure. So on Friday, we were the first shipping company in the ASEAN region to issue a sustainability-linked bond. This is a $40 million bond, 2 tranches. One is 5 years, the other is 10 years. The sustainability-linked principles are sort of in line with the guidelines of the International Capital Market Association, as verified by a second-party opinion from Lloyd's Register. So under the sustainability, under this bond, the target that we have is to reduce our ton-mile emissions by 38.5% by the year 2034, which is when the second tranche matures, compared to the emissions that we had on a fleet-wide basis in 2019. And because we have set this target, of course we get some benefit in terms of the pricing and also in terms of the tenor. So it's quite attractive. It's a unique transaction. We had to work quite hard on it for quite some time, but there's long-term benefits to it.
Thank you. And before I turn to Michalis, just one final question for myself. And then later on, we'll also see the perspective from Stavros as well. And now, Precious being a publicly traded company, when it comes to raising financing, because there will be compliance issues and related disclosure obligations. So do you think that would factor into your choice of, say, financiers, both geographically and also the type of product?
So as a public company, we have very strict obligations to disclose a lot of detail about what we do. And I think that is something that, of course, gives comfort to stock exchange investors. It helps companies like us also get high transparency, increases the corporate governance scores that we would get as a public company, but it also gives comfort to financiers, potential financiers, because it's quite unique, the kind of disclosures that we make. For instance, on our operating expenses, I've not seen any company in the world that gives a granular breakdown of operating expenses in a similar fashion to what we do.
Yeah, thank you. And we'll probably, when it comes to open floor time, we may revisit that a bit. That's a very interesting point. Thank you. Now, if I may move on to Mr. Michalis and Livanos on just first question, I suppose, is I'll be honest, before I do this panel, I did some research myself, and I realized on DryDel's website that at least for the existing fleet listed on the website, I think a majority of them were constructed in Japan. But of course now everybody knows that, and it was mentioned earlier today, China is a real powerhouse in terms of physical economy, shipbuilding being one of them, and then solar panel, other things. But also now with the sort of intangible economy, which is a financing, and hence we're here. So do you foresee yourself ordering more ships from China going forward?
Thank you, Elton. Thank you, everybody. I'm very pleased that I'm here. It is a fact that DryDel has all its fleet made in Japan. However, this is because that we have two kinds of operations. We are an operator, and we are also at the same time a pure ship owner. Due to the fact that we act as an operator, over the past 15 years we have established long-lasting relationships with Japanese owners, and this has led us to place orders there in order, to complement the business we do with local players in Japan. However, and having said that, I fully agree with the previous speaker, Gautam, that there is a massive shift of all the shipping world here in China. And of course you have our attention. We know the importance of China in the shipping arena. We know how important is the shipbuilding and the progress lately has been done. And on the financial side, I fully agree that this is the future. So that's the reason also we are here. So I'm very confident that we keep an eye on this market. We'll try to make a relationship because this is something that we put a lot of value. We honor our relationship, so we want to start also having a relationship here. And I'm sure that it's a matter of time that we will strike a deal and things will carry on doing more business with Chinese players. From shipbuilding markets to finances.
Yeah, great, thank you. And that's very, and indeed, that's of course why we're here. And like I mentioned, since I started working in this field, I've never seen things slow down, more or less. It's always been up, even during the financial crisis in 2008, and of course during COVID as well. In fact, especially during COVID as well. I think a lot of us would agree that shipping really picked up. It was a very long cycle since between 2008, post-Lehman, and just before COVID, whereby personally when I attended forums such as these ones, at least from the Hong Kong perspective, with the local owners, it was a case of, when is the recovery coming? And then I don't think any one of us foresaw the recovery. I wouldn't call it recovery. It was far exceeded expectation when it comes to the amount of growth, both in size and scale, and availability, different choices, different players, and the knowledge that we mentioned as well, very sophisticated players now, both in mainland China and of course the Greater China region, which would include Hong Kong as well. So that's very helpful, thank you. And I suppose my next question on that note would be, so when it comes to your next deal in China, which hopefully would happen very soon, Michalis, what would be your choice? What would be the factors that you consider when it comes to what kind of deal to look at, ticket size, and so on and so forth, for example? Please.
Elton, we focus on the same things that we do with other markets. I mean, predominantly, we seek for our new buildings pre-delivery financing. That's important for us. Flexibility on structures and flexibility also in the whole process. Timing is for essence for every owner, particularly us and most of the Greek ship owners. From the time we send an email and ask someone that there is a project financing, till the indicative terms, till the loan signing. So that process should be swift and within a reasonable period of time. That's quite important in order to conclude the transaction, always in shipping. Other thing is, I believe, flexibility in a sense that we've been buying and selling assets very easily. So we want our counterparties to know that, to understand that, and we want them to standing behind us because we want to excel on what we're doing. So that shouldn't be restrictions in getting the capital out when the right time for us is. So that's more or less things that we aim for to find in Chinese leasing markets. But I'm sure that from the first sight, I see that people here are very professional. They have the expertise, and I'm sure that will more or less easily match our needs.
Yeah, thank you. And I think, obviously, as a legal service provider, we see, again, any transaction from multiple perspectives. But I think amongst our competitors as well, we can all agree that when it comes to speed, efficiency, and flexibility, this is the place to be, I believe, in terms of just execution, putting deals together, and last-minute changes as well. Because we know that typically a ship takes a couple of years to build, even at the fastest, but a lot of things can change in between, and if the market takes up, for example, you want to sell before its completion, or you want to maybe change the specifications. And my personal experience is that sealing shipyards, they're always willing to talk. There may be adjustments, of course, like any other transaction, but when it comes to just the ability to find a solution and the willingness to find a solution, as opposed to say, sorry, we just cannot do it, it rarely happens. So thank you very much for that. And now may I move to Mr. Nicholas Armaos. Again, another confession. When I was doing this panel, of course, I was doing my research, and I know that Laskaridis Shipping and Lavinia Corporation recently formed a maritime logistics JV with a domestic Chinese partner, so which is very interesting. So would you please kindly share your experience with us? Thank you.
Thank you, Elton. I have to say that I am delighted to attend this forum, and I want to thank you, Mr. Bornozis, and the Capital Link team for offering me the opportunity to address this esteemed audience. So, Elton, in order to answer your question about our experience in making joint venture in China, I have to introduce and make a brief introduction of our group's business and our involvement in China. So we have been providing seaborne transport of perishable cargoes into China via our break bulk reefer vessels since 1980s. So we have a track record in this business serving Chinese clients for about 40 years. So our specialization is in ship-to-ship loading of fish cargoes, serving Chinese fishing fleets in South Atlantic, South Pacific, and Antarctic oceans for many, many years. And we dedicate ourselves to the transportation needs of Chinese fishing fleets. And during these years, it's not the first joint venture we are making in China. We have also currently another joint venture with Shanghai Kaichuan Fishing Group. And we have had a successful experience of making business partnership with Chinese groups. Going now to this specific joint venture you have just mentioned with Liaoyu Group, which is a fishing, aquaculture, and fish distribution conglomerate for Liaoning province in northern China. We have, it is a customary equity joint venture. Each party has a 50% interest and equal shares, equal share of profit losses, and joint control and governance. The latter, which is very essential, is ensured by equal participation of the board of directors and typical reserved matters which require prior consent of both shareholders. So it's worth noting that this business we had have had a successful business relationship with this group for about 30 years. So we know each other, and each party knows the goals and the concerns of the other side. I think this is the main prerequisite for building a successful joint venture in China, and it has to be based on mutual understanding and mutual trust. So with the foreign partner, talking more generally, the foreign partner who wants to make a joint venture in China needs to be able to understand the goals of the Chinese partner, and on the other side, the Chinese partner needs to recognize the requirements of a Western company for joint control. We also need to bear in mind that doing a joint venture with a state-owned company in China requires prior approval by the state-owned Supervision Administration Committee, which is the SASAC, which may become a time-consuming exercise. In essence, the main features that have to be approved is the joint control provisions, as well as the minimum amount of capital that will be invested by the foreign partner. Another point I want to share with you is our such joint venture is not just a trading joint venture. We are going to build via this joint venture reefer ships in Chinese shipyards, which will be financed by Chinese financiers. So it is a project which is not just a trading joint venture, but it will be an assets holding company which is rather an autonomous and full-scale operating company.
Yep, thank you, Mr. Armaos. That's very helpful. And on that note, would you foresee that as a new trend, or is it because obviously when we talk about raising financing, immediately our brain tends to, well, at least my brain would turn to, a debt structure, some kind of debt involvement. But of course, equity is exactly what JV could be. So would you believe that would be something which become more common in the domestic PLC market, with foreign owners just doing JV instead of just doing a straight loan, for example?
Yeah, I mean, such direct JVs in China is quite difficult to make forecasts on the formation of Sino-foreign joint ventures. I mean, I very much doubt that the current business mode of international ship owners carrying Chinese cargoes is about to change in the next years, as it has been proven efficient and mutually beneficial. Having said that, the formation of joint venture between Chinese and foreign companies makes sense in certain niche shipping markets, like the conventional reefer market, which has some peculiar characteristics. I mean, is it's a market which is a minimal new shipbuilding orders, but because there is ongoing substitution by reefer containers, and on the other side there are Chinese cargoes, mainly fish and krill, which could not put into containers. So in that context, there is a convergence of interest between the cargo owners and international ship owners. We have in that context there is a combination of cargoes which are eligible for support by the Chinese government and Chinese shipyards, and the expertise and know-how of international ship owners, which may become on this environment, the joint venture may become a viable prospect. In any case, I have to reiterate what I said earlier, that each party needs to understand the other party's goals and concerns, and have to build mutual trust over the years in order for such joint venture to become a successful joint venture.
Yep, thank you, Mr. Armaos. That's very helpful. And certainly the point about mutual understanding and trust, that's the key one. Again, as legal advisors, a lot of actually what we do comes from what we call repeat deals, whereby you have the first deal. There's always takes time for everybody to know each other, both lawyers and the principals being the lessee, the lessor, the borrower, the lender. It's always the same. But once you pass the initial transaction, everything else, at least when it comes in the commercial negotiations, in my experience, tend to go a lot quicker. And then it would help improve efficiency, and it would reduce costs for the legal fees and also for financing costs as well. So thank you. And last but not least, and thank you for your patience, we've moved on to Mr. Stavros Gyftakis. My first question to you would be that being a CFO of 2 NASDAQ-listed companies, so you would have a lot of experience involving in the U.S. capital markets. So whether it's all kinds of products, right? Could be bank loan, could be bonds, could be securitization, or other structured products. So with that background in mind, and against what we have come to know as various financial solutions being offered by Chinese institutions, whether they're banks or leasing companies, what would you say are the key features in the U.S. capital markets that perhaps you would like to see replicated in domestic Chinese capital markets, please?
Thank you very much, Elton. Good afternoon also from my side. It's amazing to be here again in this great city. The energy of this city and of the shipping crowd here in China, and specifically in Shanghai, is amazing and very close to our hearts as a company, as our CEO said before. So thank you, Nicola, Anna, and Annie for having me here, and also an exceptional panel of very good friends and people that we have crossed our professional paths many times in the past. So indeed, the group comprises 2 publicly listed shipping companies. We try to offer sort of a full menu to our investors. One company is kind of a more long-term play, focusing on the Cape sizes, solely on Cape sizes. And then we have United, which we spun out of Seanergy in 2022, looking, to follow a more diversified investment model and a more sort of buy low, sell high kind of investment approach. Indeed, the capital markets we have tapped the capital markets a number of times in the past. One can even say that the capital markets have been the growth engines of our group, both on Seanergy's and on United side. The main characteristic of the capital markets, and especially the US capital markets, is that it is the most scalable and inclusive form of capital that you can have. Shanghai Stock Exchange is, of course, scalable. We're talking about the largest stock exchange in Asia and the 3rd largest stock exchange in the world in terms of market capitalization. Where it is lagging a bit behind is in the front of inclusion. The depth that the US capital markets offer in terms of liquidity in terms of participants is astonishing, and more liquidity translates into more opportunities for issuers. And I'll give you an example. When we first spun out United from Seanergy back in July 2022, almost 2.5 years ago, it was a tiny little company owning only one 18-year-old Cape-size vessel. One would expect that investor interest would be relatively muted about this company. Nonetheless, when we announced our first transaction there, which was actually an agreement to acquire 4 tankers right before the rally of the tanker market, which was staged in the mid of 2022, we started doing amazing trading volumes. Imagine that United Maritime back then had 1.5 million shares outstanding. So when we announced the transaction, we did a trading volume of 100 million shares. Every share of the company changed hands 80 times. This allowed us to price a very significant transaction. It was a 25 million transaction. We're talking about a company whose market cap was 7 million at that point. So we priced a transaction of more than 3 times the market cap of the company, which allowed us to buy the ships, which we then very quickly sold for a fantastic profit, which was distributed to the shareholders. So that was enabled only in the US capital markets because of the depth and the liquidity and the inclusive approach that the local capital markets have. Opening up your capital markets into foreign investments is very important, and it's actually key in attracting the interest of more shipping issuers. Then very important is also the following by international shipping analysts and public relations and investor relations firms like Capital Link. Nicholas and his team has done an amazing job in promoting the story of shipping companies in the US capital markets. And of course, a similar amount of work is being done also in Asia by Nicholas and his team. So it's important to have a significant following of analysts that can tell the story of the companies, because retail investors and sometimes also institutional investors are not adequately informed, and they don't want to spend the time. The attention span of an investment is very limited, so they don't want to spend the time to get educated. They want the analysts to offer the key points of each company's strategy and business model so that they can follow the targeted investment. And then last but not least, it's very important to have transparent and consistent regulatory environment. That helps investors making informed decisions. It assists them, it supports them in knowing the regulatory framework when it comes to the tax impact of their investments. They need to know that it's transparent and it's consistent. Of course, China has made huge steps over the recent years towards building a very solid and transparent regulatory framework, so things are heading to the right direction.
Yeah. Thank you. Thank you, Stavros. It's very, very helpful. And in fact, you mentioned that indeed Shanghai Stock Exchange is absolutely huge, and the Guangzhou Stock Exchange as well. And I suppose myself, slightly selfish here, I'm based in Hong Kong, so I'll be remiss not to mention the Hong Kong capital markets as well. We've had some hiccups in years, but of course, when it comes to corporate governance, professionalism, knowledge, again, flexibility, efficiency, Hong Kong is still very much very much in the forefront.
It's a very promising market, and it has seen much interest from shipping companies in the past and currently.
Yeah, so that which feeds into one of my second question for you would be, again, the consideration for your next transaction, for example, if you say want to tap into capital markets, when and I suppose where and the how would you decide which next deal, basically?
Look, there are basically 2 key factors that we consider when we want to tap the capital markets in every transaction that we do. First of all is the valuation of the stock. It's important when you transact to be as close to NAV as possible. Of course, a discount is something that you could potentially accept if you have a transaction on the other side of the equity raising, which is sizable and can provide accretion for the shareholders. And secondly, it's basically the liquidity of the market and the interest of the local investors on how to price the deal and whether they want they have interest on the specific shipping sector at the given time. Else you will have to accept a large discount, which is to the detriment of the existing shareholders.
Thank you, and we're doing just fine on time, so that would be the initial round of questions. And before I open the panelists to the floor for any free discussions, I just have a couple of questions for everybody. So we're very lucky to have an esteemed panel of financial experts, but also in the dry bulk sector as well. So I suppose an obvious question, again, this is for my personal knowledge as much as hopefully for our audience here, because I'm here to learn, is that we've mentioned already that the shipping sector, in terms of capacity earnings since COVID, just really took off across basically all the subsectors. So, and again, this is open for anyone, please. So please feel free to jump in. What would be your views for the outlook of the dry bulk sector? And please, it's open for everyone.
Okay, I'm happy to take that. So, if we look at the dry bulk import data into China for the month of September. So just three commodities, iron ore, coal and soya bean, 163 million tons imported in the month of September, which was a record. Now if you read many of the sort of mainstream media publications, at least where I live, you would get the impression that China is in distress and things are pulling back, but that's not what we are seeing on the ground. As a dry bulk company, we are seeing increased imports of, for instance, coal imports are up in the month of September. So year on year, it was up 13%. For iron ore, it was up 3% year on year. And soya bean, it was up 58%. So quite a different picture. I see no reason for a reversal in this. So for instance, coal is on the back of increased electricity production in China. So year on year, it's up 10%. A lot of that is on the back of coal. Of course, domestic production of coal is down as well. That's a trend that's going to continue on the back of increased data centers for AI, just increased electricity demand. So not only in China, but also we're seeing a little bit in India. Similar kind of a story, but more just on the coal side. So we remain extremely positive. I think so. China, people say it's slowing down, but actually the economy is expanding about 800-900 billion per year, which is the size of Saudi Arabia or Turkey each year. So that's still quite meaningful and very positive for the dry bulk market.
Yep, thank you. Any others, please? Yes.
I very much agree with what Gautam said. I think that the most promising sector in terms of investment now is dry bulk. The demand is showing very, very strong signs. Of course, there are, on the supply side, there are differences between various sectors, with the standout performers being the Cape-size vessels over the recent years. At last, we saw the Cape-sizes claiming their A status in the sector, and that comes as a result not only of a very limited order book and very limited supply coming in the market, but also on the demand side, other than the volumes that are growing, as Gautam very well said, you have also an amazing ton-mile demand coming into effect. You have West Africa up 17% in 2024 in bauxite exports. You have Brazil 6% up in iron ore exports. You have all the various projects ramping up over the next couple of years in West Africa and in Brazil, S11D, the Simandou project, and what have you. So we expect that the demand will continue to grow at a very good pace, and on the back of a limited to no order book, we expect our vessels to earn very good rates over the next at least 5 years. And to give you an example, I was trying to find some data to impress the audience, although I know that the audience here in China is not easy to impress given what they have witnessed over the recent years. So I was reading about the NEON project in Saudi Arabia, a 1.5 trillion project. This is consuming 20% of the global steel output, one single project. And it's projected to do so until it is completed in 2045. Can you imagine a single project is consuming 1/5 of the global steel output? And there are going to be more projects like that. The world needs steel. It's going to need more steel. Also, aluminum has to play a very important role as an energy transition metal. So I expect demand to grow very steadily and very strongly over the next years. And basically, we don't have supply. We don't have any vessels coming in. I mean, it's a minimum amount of vessels. There won't be enough vessels to carry around the iron ore and bauxite that the world is going to need.
I agree with Stavros and Gautam. Speaking while I was here, there are very few builders building capers. They prefer, of course, Newcastle-Max, but overall, the production and the shipbuilding of dry bulk ships is less than the previous decade. So we as DryDel, we see that there is no oversupply, and because the new regulations coming into effect and the environmental regulation, ESG related, will demand better ships, new ships, more efficient ships. We strongly believe that the outlook over the next years is going to be positive.
I agree fully with what Stavros, Gautam, and Michalis had told before. Needless to, I have to say that Lavinia Corporation, Laskaridis Shipping, has also a big presence in the dry bulk sector, because we have across all sizes about 50 vessels, which is across Ultramaxes to Newcastle-Maxes, and we have also 8 new building orders in Chinese shipyards. So, looking forward, we maintain a cautiously optimistic view on the dry bulk sector, and we would not be surprised to see the activity and charter rates picking up substantial over the next few months, and also, to be more specific, in early mid-2025, when the Chinese government stimulus when it will have enough time to reach its full effect. So also, we have to note that in recent months, it seems that overall ordering across all bulker size is set to gain also a record highs since some years, which is, although there is a key challenge that the new building prices have returned to near record highs in cash terms. So that is an indication that there is an increased activity across the dry bulk market, which it's a sign of growing confidence among ship owners that current lower market price offer a safer and, of course, more attractive entry point for vessel acquisitions. So we remain cautiously optimistic for the future in the short term of the dry bulk sector.
Yeah, thank you very much, and again, thank you for all your opinions. It's very helpful, and I certainly agree that, especially the part about what you read in the media and versus what we actually see on the ground as well. Again, as legal service providers, the volume of transactions, new transactions of new money, brand new orders, just really never stopped. So surely that means that there's a huge demand coming, not just now, but also projected by the time the vessels are completed. And again, just purely from a sort of legal background, I don't think a lot of people in the general public realize how many things can only be transported by dry bulk carriers. And the small things that we just didn't realize, and that's why the demand will always be there. And the fact that supposedly the Chinese population, we still have 1.4 billion people here, and that's just for the domestic consuming imports. And on that note, I do realize that thing is slowly blinking, and again, thank you all for your time, and maybe shall I just open to the floor for one question from the floor, perhaps? Okay, so again, it's been an absolute honor and privilege to sorry? Please. So the question was, what's the approach to ESG-linked project?
Yeah. Thank you, George.
Yeah.
ESG, we know that in the Western, at least, front, or in the Western market, ESG has been a pivotal role. From a Chinese finance point of view, we're happy to see that, let's say, Chinese finance, either we call it debt, either leasing or ECA finance, is here also to support a drive towards a greener future. So we've seen finance of dual fuel ships, we've seen the past financing of innovative solutions like scrubbers. We now see finance of carbon capture.
Yeah.
So, and it's, as we said earlier, Chinese finance is not dogmatic. It's very innovative. It follows the requirements. And if you have let's say, ESG regulations, or if you have a commercial necessity, it follows solutions that are, let's say, ESG driven. And this is key. This is key. I think the most important for me is that it's very much relationship driven. And if they understand your business philosophy, and if you understand what drives ESG, if you really demonstrate that you believe in it, you follow it, it's not just a tick box exercise, then there is an abundance of capital, and you just have to be here to capitalize that.
Indeed.
And if I may, so just the last line from me.
Sure.
It supports the real economy.
Yes. Yeah, please.
Yeah. DryDel shipping, we have on order 8 more new buildings, and we have already taken 4 ships this year. I was expecting the bankers to be, challenging me as a CFO, which they have done in the past when we have ordered ships and the fundamentals were different, the market was different. I'm talking about George 208, you know that. So this is slightly different because I understand that the bankers are now eager to catch up with modern ships. They have also their requirements and their pressure from their boards and their auditors to have green books, to have green assets on their balance sheets. And actually some people said to us that if you go for an ESG report or not, but having modern vessels means that we can offer you better pricing. So I think that we're going to see a change on that, more competition to finance projects from the lenders, any lenders, of modern assets, eco-friendly, with low emissions and better for the environment.
If I can perhaps just to add. So the environment, cutting our reductions has been very important for us. Making sure that our environmental impact is minimized has been something very important for us. In 2009, we put in place an environmental policy statement, which has helped us actually reduce our carbon emissions by about 50% in last year compared to 2014. We are also actually proud to say that we are the only Thai shipping company, maybe the only ASEAN shipping company, which is carbon neutral on our Scope 1 and Scope 2. And we've done that with offsets in the Thai market. We are, as far as G is concerned, so as a publicly listed company, we have obligations to ensure that we have high corporate governance standards. So the Thai Stock Exchange has actually given us sort of a 5-star rating for the last 14 years in a row. That's something, again, we're quite proud of. So again, ESG is extremely important. I think today, if you want to access certain pools of capital or if you want to get certain pools of investors, you need to have very high ESG scores.
And then Mr. Miles, yes.
Yeah, I think George did address a very important issue on the development of capital raising process of the ship landing in China. Yes, we do expect that sustainability factors, mainly the ongoing regulations on decarbonization, will become the driver in ship financing over the next few years. We have to be honest here and to say that so far the compliance evidence has been rather cosmetic, but we expect that we'll obtain real measurable substance in the path to 2030 decarbonization targets, So this factor will have an impact on pricing, even on the financing approval itself. So this trend is already visible in European banks' policy on new financings, but we estimate that it gradually be extending and become instrumental to Chinese banks' policies and to Chinese leasing houses. So we believe on that, and we are prepared to get financing on green projects, on projects that are well ahead and in achieving the targets of decarbonization and the ongoing regulations by IMO. Thank you.
And Stavros, please.
Very quickly, because Nicholas and Annie have done an amazing job in keeping the time, and I think this panel is derailing a bit the conference. Thanks to George Hiradakis. But we always love the color, George. We always love the color. So I'm addressing this to all our friends from the Chinese leasing houses. We don't need more policies. We don't need more boxes to tick. What we need is actually essence in your lending. Given China's focus on sustainability, you have a very important role to play in this transitory phase for the industry. So I'm very happy to see you considering financing older ships, financing retrofits, financing the installation of energy-saving devices. The existing ships will be with us in this transitory phase. Let's all work together to make them more efficient so that we can smoothly transition into a greener shipping industry when the technology will be available. Until then, support the existing ships, continue financing the existing ships, mid-aged, non-eco, older tonnage, and continue financing energy-saving devices and retrofits which have an impact today rather than waiting to see what an impact will be tomorrow of the technology which is unknown to the industry.
Thank you. And just again, please put our hands together for our esteemed panel of guests, please. And thank you for Capital Link. Thank you.